Alright, how's it going everyone? So today I'm going to go ahead and teach you guys uh, more in depth and of the basics of the strat I use to trade NQ. So first thing first, essentially what I trade is, I like to call it the MP50 concept. So essentially it's the multi-purpose 50% level. So all I really use is just highs and lows and Fibonacci. So I'm going to start things out showing you guys how to use this with current price. So the first thing I like to do is I start off at the top of a swing or of a bit larger scale move and drag it down to the bottom. So swing high, swing low essentially. And with that, right, you're also going to mark out the high of that move and the low of the move. So right there and right there. So the three things you're going to be using for this is you're going to have a range, you're going to have your 50% level, and you're going to have price action. So essentially with this range, right, what you're looking for is to either make a breakout, sweep liquidity at either high or low, or come to the 50% level before doing any of that. So right here, we currently went to the 50% level. So off of this, right, and this is just a 1 minute time frame. You can do this on any time frame, any candle, any type of range that you have. So off of this, right, with the 50% rule, if we're above, we go long. If we're below, we go short. How you enter, it's completely up to you. For me personally, I like to see a open rejection to the opposing side. So if it's a sell side, I want to see it first open in the buy side, reject it, and then become a sell side candle. So off of that, right, I just target sell side. So a key important thing is to use your levels, right? So here, usually if just starting things off to the first rejection, I'm going to be looking to target your previous low, whether it's here, here. So this is really good for scalping, and just overall, it's good for catching small scale or large scale moves. So this move alone, right, if we were to measure it out just to this support level here, it would give you a nice cool 100 ticks. But the ticks doesn't matter, how you execute is what matters the most. So essentially, that's what it is. You take your swing high, swing low. I like to go off of a nice clean move like this. This is perfect for using this method. And then use target the top or bottom of the range while using previous levels, such as previous highs or previous lows, as continuation for the movement to keep going. So off of this, right, we would have been short, whether it's you wanted to have taken a short here, taking a short here, wherever you wanted to have taken a short. The risk is completely up to you. It's just a matter of how you manage the trade. So let's say we took a short up at this level here, our last time that it came up to touch. So essentially our play would have looked like this here. My stop would be a little bit above that previous candle and targeting these lows here. So while it's already in motion, right, you take the short. Don't be scared of the pullback. Sometimes it's best to enter on the pullback itself. So once we're actually in motion, we look for it to break and close and hold below those levels if we are in a downtrend. So continues, and boom, there you go, TP. Nice little 391 ticks. Now, what's really cool too about this is it doesn't need to be the whole external range, like the whole major move. It could be even a smaller move here. So let's say we're taking this swing right here, this smaller scale swing, high to low. You just wait for price. So we're in a downtrend because we're below the major 50. So we just wait for price to come down below it, take a short off the rejection. Simple as that. You can do it again at the next one, right? Swing high, swing low. Same thing, wait for the rejection, enter. And remember, anytime a candle wicks out, that does not count as a break. You could have done it again right here. You could have done it even from here to here, right? So nice entry there too. So anytime you have a nice consistent downtrend, you know, don't be scared. And even with it going up, you could have done the same thing. So I'm going to show you guys an example on a bullish side to close out a nice even range. So let's say I'm taking this swing right here, top to bottom, So here I have an identifiable range. So I'm going to go and draw out my top and bottom and my 50%. And if you want to go into more detail, be a little more strict with it, you can just simply use this. Just this section of that swing with the uninterrupted move to the downside. I personally like using it this way, where before it has the break. So the main consistent move of just down consistent candles. So same thing here, right? Here we have the range formed. And another important cool thing is too, on the candle that sweeps your high or low, right? So in our case, if you this guy right here, you can draw a 50% level off of that one too, and take a long entry off of that, targeting whether it's a previous high or back to that 50% level, whatever you choose to go for if price is right. So here we got exactly that. And then right here, we're currently above it. So we would look for it to break above, retest it, go back, so on and so on. Now, a really important thing is when you are monitoring to it, you're going to look for price action heavily. Like say right here, this wouldn't be a good entry because you have a small little doji right here and you have a sell side candle. So this is not a good breakout. Same thing here, not a good breakout. Like when we break out, we want to have a nice candle like this, right? A nice clean rejection. If it's indecision, don't go for it. So here, right, you can use this small internal one, taking a nice entry off of that, or even the 50% level that is swept. Now let's use a example on the hourly time frame, because this works on any range that you choose, right? As long as it is a valid range. So this swing right here, let's take that for example. So this is the hourly time frame. I'm going to draw a 50% of it, just like that. And then you can go on to draw your highs and lows. And then you can go to your 15-minute candles, because once you do currently have a range selected, you still want to go down to a lower time frame for executions. So I'm going to draw a 50% off of the 15-minute candle that swept. So that'd be this guy right here. So right here, right? We swept a low, so we are looking for it to come back to the 50. So anytime you take out the low, if it's still within the range, go for the middle of the range or the high. So here we got exactly that. Came back above, and then came to target the high. Now let's say you're like, oh hey, like how can I have identified once it broke out, right? And draw an entry off of that. So remember the same thing. We break out to the upside, we swept liquidity up top, taking an entry on the 50% of the candle that took out liquidity, right? So there you go. And then if once it came back to the range, you could have done the same thing. And then for a target for that high, you could have just used this previous level right here for a target. And that would have been perfect. Now let's say we're using this one right here, right? This is actually going to line up really nicely with our previous zones. So I'm going to clear this out and show you guys here. So I'm going to use this one right here, draw 50% of it. So here, we did not get a valid or clean execution. So here we shot a sweep first. And you could take shorts off of that. And you could have just targeted at least first the previous highs on the long position. So don't automatically assume that's going to go straight to the 50. You want to use your previous levels, such as previous highs and previous lows of the counter trend, to know where price is going. So I'm going to go back to now an hourly and show you guys that works just the same. So here we are on an hourly candle. So let's say I just take this nice move, right? 4-hour candle, 50%, high and low. So this is going to be really similar to ICT's candle range theory. I just have it modified essentially and changed it all up to pretty much go and be used for anything. So now we can go into our lower time frames, like the 5-minute. If we could find where we are on the chart first. So here we have that 4-hour range. So here we have the lows, right? And here we swept the lows. So I actually need to adjust how I drew it out. So this is going to be the sweep candle right here. Draw a 50% of this candle. And there you could have got your entry. And just like before, targeting previous highs and using those as continuation. So that's essentially how this thing works, is you find your range, whether it's a consolidation range, a high and a low, a swing high, swing low, or just simply a candle. So off of that, you target the opposing side or the middle level while using previous highs and lows as your confirmation that price is going to keep going. So this is the main strategy I've been using for the past, for a cool bit now, and it's been working out great. So the 3 important things, right, if you were to write them out, is range first, 50%, and price action. Those are the 3 main things you want to use. And for the Fibonacci, right, so that's what I use to draw them out. These are my settings for them. I only have the 0.61 and the 0.5, which is 50% and 61%. And I just use the background here. So now it only shows this. Essentially it's the golden zone, which is really similar to another concept. But that's how I use them. That's all it really is. So off of that, with current price, you could have got that nice short and have been in with us too. Could even been in right here too. Just a nice simple range. Swing high, swing low. Enter off the 50. And there you have it. Sweep the high, back below the 50, sweep the low, and you can just let it continue. And continue and continue and continue. So this is what I mainly use to know my targets, where I want to take an entry off of. So with this, it is very heavy on being patient. Just be patient, make sure you have your confirmation, and know where you want it to go. So with that being said, thank you very much. I hope you guys made sure to fully dive into it, test it out, do your own due diligence, and really figure out how this works for the more minor stuff on your own, and just how to use it, because this is honestly the perfect tool. It's really easy to use.